This is the Morning Drive. My name's Tim Elliott, and this is Mirror Business FM. Now, money and markets and crypto and gold and all sorts of related classes now. Today's markets are reflecting, it's probably fair to say, a tale of two asset classes. Risk sentiment is shifting sharply. In the crypto space, Bitcoin's given back all of its post-election gains amid renewed volatility, thinning liquidity as well. It signals uncertainty for digital asset traders and institutions as well. And at the same time, China's gold sector witnessing robust production, a remarkable surge in investment demand, bullion increasingly attracting investor interest over traditional jewelry consumption. Simply put, in precious metals, it's been a roller coaster ride this year so far, for sure. What does all of this mean for investors, for you, for me, for the markets? Jagpavit Bhurjee is a research analyst at Century Financial. Joins me in the studio. Jag, good to have you here.
Glad to be here.
It's interesting so far this year, and I wonder, before we get into kind of the nitty-gritty and the details, what do you make of 2026 so far? Because in precious metals, let's start with gold and silver. It's I don't quite know how to put it into words.
There's just one word, right? Volatility. That's what's defining the markets nowadays. Not just in precious metals. As we speak, cryptos, equities, everything has been moving crazy nowadays. And majorly there's a macro backdrop to it. There was a big news that came in a few days back when Trump nominated the next Fed chair. There was
Kevin Walsh,
Kevin Walsh. So a lot of risk sentiment has shifted in the markets. A risk-off sentiment as such that we can see coming off from, let's say, high beta tech plays and cryptos shifting towards the safe havens. But even at the same time, when precious metals had been giving all-time high returns, they were at record highs. That's when the news came in. And somewhere, the Kevin Walsh being a hawk, there is a expectation that monetary conditions will tighten going forward, which is kind of, bullish for the dollar, higher yields, and somewhere it's impacting the, return expectations from gold and silver moving forward. Recently, in the past 2-3 years, it's all central bank driven. We have seen that the average buying in the past decade has been around 400-500 million tons, but in the past 3 years, it exceeded 1,000 million tons. Central banks all over the world. But 2025 data is already suggesting it's slowing down. It came at around 800 million tons. So, moving forward, we're expecting that although gold and silver are going to be, generally strong, but 2026 has started off to a, volatile note as such. I don't want to call it bearish for metals. It's too early for that. But there's a lot of volatility moving forward, and that's going to be the norm of the market.
Well, we've certainly seen a correction of sorts, haven't we?
That's right.
But I mean, we talk about gold a lot on this program. Our expert, if you like, Jeff Rhodes, will be back on Friday. But his prediction for this year is still $6,500 an ounce.
Sounds about right. So, last year we had seen so many, like the big banks giving targets 5,000, 5,400 for 2025, 2026. It hit in the first 2 weeks of 2026. To be honest, the kind of flows we're seeing, the capital flows, investor demand, ETF flows, again, central bank being a big driver for precious metals, 6,000, 6,500, it's very easily achievable, maybe even in the first half of the year.
We'll come back to gold. I want to talk to you about gold and Chinese attitudes towards gold as much as anything in a while. But let's talk about cryptocurrencies, digital currencies. Bitcoin gained substantially after the election of the US President Donald Trump. It's slumped lately. I think it's fair to say slumped alongside other digital asset prices. How would you frame the current kind of macro backdrop when you're talking about Bitcoin?
Yeah. So, like you said, when Trump came in, part of his election was pro crypto stance, pro crypto policies. That's what was driving Bitcoin prices back then. In November 2024, when Trump came in, prices were still at about the same level it is at now, right?
Yeah.
At 60, 70,000 for Bitcoin. It rallied up to 126,000 at its peak. And then, sadly, macro headwinds started coming in. So, like I said recently, Trump nominated Kevin Walsh. Again, monetary conditions tightening in the future is expected to play heavily on risk assets. So, we're also seeing tech equities, getting hit by this. Speculative assets are basically getting affected a lot. And that's what's happening with the Bitcoin and the crypto market in general. Bitcoin came down to 60,000, went back up to 70,000. I mean, for long-term investors, this is just another, dip in the market. They've held this for a long term, and they've seen such cycles play out. So it's better to call it a correction at the moment rather than a crash and it's just all gone. So yeah, I mean, and on the fundamental background, the U.S. economy still stays strong. I don't believe that there is something structurally different. The GDP figures are still fine, positive. Labor and inflation doesn't ring in any alarm bells as of now. And the only thing that is overshadowing everything else is Kevin Walsh's nomination. Even that is uncertain at the moment. It's not confirmed, yet the markets are pricing it all in. So that's what's happening right now.
Yeah, I mean, that makes sense, doesn't it? It's an uncertain path for rate cuts, I suppose, until you know, of course. Do you think some investors are concerned about tech valuations? Do you think they're inflated slightly? Do you think that's part of the backdrop as well?
Yeah, of course. There was a big fear going on that tech valuations have been overstretched, and honestly, the recent sell-off is probably giving some relief to the skeptics. But this is also partly driven by the earnings season. We've seen Microsoft fall like 10% after its earnings, given its high capex investments moving forward. Its markets are seeing that it's not paying off too soon, but this has happened before as well. I mean, Meta jumped 10% this earnings, but last earnings it had the same concerns that Microsoft is facing right now. So, I mean, the big tech basically is facing a slight correction as well, and the overvaluation and the PE figures are starting to look better at this point. And let's see, moving forward, this is going to be a great buy on dip opportunity for big tech, because at the end of the day, these companies have a lot of cash reserves for them to spend heavily on AI, spend on research, get the base sorted so that the returns get exponential over the years. But recently, it's just earning seasons and then the volatility with the fundamental and macro backdrop that I just explained.
Let's talk a little bit about gold and talk a little bit about China. I'll come back to Bitcoin in a minute. I've got some questions kind of bubbling, really. But 2025 data revealed a significant evolution in Chinese kind of consumer behavior. Traditional jewelry consumption adjusted. It was down about 30% year on year. But there was this real surge in demand for kind of physical investment products. Do you think China's shift towards gold investment demand, what does it tell us about investor risk appetite and kind of hedging behavior, do you think?
So basically, yes, it is showing us a lot that consumer behavior has shifted drastically. So jewelry demand has been a primary driver of gold consumption in countries like China and India. It has a lot of traditional aspect and cultural aspect to it. And recently, it has turned into more of an investment. It's a big part of someone's portfolio at the in nowadays. Because just looking at the returns in the past few years, you can see gold has been outperforming equities. So there could be some level of attraction towards those kind of returns from a safe asset as such, right? As a portfolio diversifier, gold has always been a great asset to have. But if it gives you returns like 60-70% in a year like it did last year, it is increasingly going to be seen as an investment as well, along with the traditional asset classes, equities, bonds. It can be part of your portfolio, not just as a diversifier but as a return driver. So that's probably what investors are seeing and adding more on to their portfolio. Let's say even physical demand is increasing, because let's say I need some kind of jewelry in the future. I can still just buy some physical at this point in time and just convert it later, because it's keeping its value so well.
Yeah.
And even in the future, it's expected to just hold its own. So that's probably the shift in behavior that's happening in China, and probably going to be seen in the rest of the world as well.
How do you kind of interpret the change, though, looking towards China?
It's pretty obvious, right? Again, the perspective of it being let's say risk-free or a diversifier, let's say uncorrelation to equities, that becomes another big aspect. And someone who wants to have gold or buy gold as an investment doesn't have to look twice for it. Recently, prices have been again volatile, but expected to do well. People are seeing ETF demands. People are looking at the data, looking at central bank demand. It's all growing, right? So at the end of the day, it's for an investment purpose. Gold is acting its own, in its own way. It's giving great returns. So
When it comes to your, talking to your clients, and the spotlight is on gold. There's so much more interest in gold at the moment. Are you saying to people, look, traditionally gold was perhaps 10% of an investment, an asset allocation. Are people demanding to hold more these days? Are you advising people on that? What's the kind of, I suppose it's the gossip around the water cooler, really?
So it's going to depend on every individual client, every individual's risk appetite, how much ever they're willing to hold gold as an asset or part of their portfolio. At the end of the day, gold talks a lot to the previous generations, to the older generations, as they have seen these kind of assets hold their own value, like real estate or physical tangible assets which they can hold and generally feel like that's where the investment shows. But again, every client is different. Someone wants to hold more gold, someone wants to just keep trading gold. The volatility is great for speculative trades. So activity is high at the moment, but every dip should be probably an opportunity to add up.
Let's look a little bit to the future, and let me just throw some figures at you and some thoughts at you, if I can. So, and particularly with China in mind, I think here, shifting consumer behavior, unprecedented inflows. That's the quote, into gold-backed ETFs, exchange-traded funds. Over 133 tons in 2025. That's up something like 150% over the previous year. The Chinese government's drafting a 5-year gold industry development plan, which is this year to 2030. That's focusing on deep mining technologies beyond 2,000 meters. And they're also expanding the use of nano gold in high-tech manufacturing. So, that in theory, that's to ensure future resource security. So, my observation from that is It's a lot of information there, first of all. But the second thing is, all that glitters is still gold, isn't it?
Exactly.
Yeah.
So this is sounding a lot to me like how we look at silver, right? It's not just an investment or a precious metal. It's also an industrial metal. It has a lot of uses. The demand for silver has been booming crazily with solar panels, electrification, EV, all that industry is demanding a lot of silver. So the industrial demand is pushing it. There has been supply constraints for silver that has been pushing the metal up. Same way, if you talk about gold, along with investment, if there is going to be a lot of policy support for the metal to be used in industries, and it's a great conductor, for electricity. So it can be used pretty well. It's just an expensive metal. So if there is support to it, there is more demand to it. Again, you never know where the ceiling is.
Yeah. Let's just finish off. We've got a couple of minutes left, but back to Bitcoin. We've seen contraction in Bitcoin for several months. Assuming the current climate continues, and that's by no means certain, there's no way of predicting what President Trump's going to do, that's for sure. But assuming it does continue in a similar direction, and assuming that Kevin Walsh is confirmed as the new Fed chair, what do you expect to see when it comes to Bitcoin, to digital assets?
So again, recently or in the short term, we're seeing heightened volatility. We're seeing a pullback, and that's probably because of all the things we just mentioned, Kevin Walsh and then tighten monetary conditions. But at the end of the day, again, if you look at interest rates, we are still expecting 2 interest rate cuts this year. That is going to be somewhat helpful.
And that's unchanged?
That's still unchanged.
Perceived wisdom.
That's still unchanged. The market still expects two interest rate cuts, probably starting June, July. That's after the election of the new one. Somehow that times well. And then we're also seeing, we've seen Bitcoin in the past, let's say 5 years, drop more than 30% at least 4 times. And consequently made all-time highs after that. So, I mean, for long-term investors, it's really like, it's just a small blip. They've seen 70-80% drops before. So it's nothing, to scare away the true believers as such. So I've also read that somewhere that the, Bitcoin ETF, IBIT, there is an ETF where the average cost basis for Bitcoin is somewhere around 90,000. It's currently trading at 70, 75. So, I mean, there's about $15 billion worth of unrealized losses. I don't think people are really just willing to take that upon themselves. True believers are going to hold. It's going to go back up, and hopefully profit booking happens at that levels. But I don't think at this point of time there's a structural issue to Bitcoin and digital assets as such. It's just a dip, and even technically on the charts I had seen on the weekly chart, on the long-term time frame, it's bounced off its 200-day SMA, which is like one of the most important moving averages, right? So the long-term trend still remains bullish, still remains intact, and let's see what this year brings on.
Yeah, I guess so. We started with that, roller coaster ride in precious metals 20 minutes or so ago, and I wanted to end there really because, as much as anything, we see corrections in the market. That is a standard. You go through this all the time. You're looking at this through kind of a different lens, I suppose, with what you do day to day. And you seem very relaxed. You don't seem particularly worried. There's nothing really overly sensational here, even though we're going through this time of, should we say, heightened volatility?
That's true. I mean, the volatility is totally driven by, a lot of speculative plays. The moment there was a small correction, a lot of people start getting, margin calls. They start getting liquidated. The stop losses start to get hit. So it starts to, get into a cycle where prices start to move pretty violently. But volatility is good for, traders at the end of the day. If you're an investor, If it falls, just buy more. But you need to, of course, do your due diligence, research on if you really want to have a volatile instrument like crypto or Bitcoin in your portfolio. Again, depending on your risk appetite, have a balanced, portfolio, like even precious metals for that matter. At this point of time, you need to really think about if you can take the volatility that's going upon, have a smaller allocation if you want to sleep at night peacefully without the worry of big swings. So it all depends on individuals and their preferences.
Jack, it's been good to talk to you. I appreciate you coming in. I know you said before we started, first time doing this, you wouldn't know. And look, it's gone like that. It goes in moments. It really does. Jagpavit Bhurjee is a research analyst at Century Financial here in Dubai. Appreciate you coming to join us. Thank you.
Thank you so much for having me here.
You've been very welcome. It's Mirror Business FM. This is the morning drive. Get in touch. Tell us what you think on social media. Like and subscribe. We always appreciate that. If you can do that, and everything we do, a reminder, you can listen and or watch again on our website, on YouTube, wherever you get your podcasts from. Just look for Mirror Business FM. And also a reminder of Crossroads. We are 4 shows into our new show, which has begun here at Mirror Business FM. It's a collaboration with Middlesex University, presented by Dr. David Tully and Dima Magalse from the university, and it's a show all about the business of media, entertainment, and much more. Every Friday, 1 to 2, plus wherever you get your podcasts from. This is Mirror Business FM.